All right, I'm gonna let everybody trickle in a little bit into here.
Okay, you make the call?
Yep. All right, we're gonna go ahead and get started. I just wanna let Jeff, Megan, and Jennifer, thank you for doing this. They're gonna be here today talking about Business Interruption Outlook and Payroll Protection Program. I'm gonna toss it over to Cindy. She's gonna kind of explain the layout just to make sure everything flows smoothly, and then we'll go ahead and get started.
Hi, everybody. Hey, thank you for taking time out of your schedules to meet with us today. What we're going to be doing is during Jeff's presentation, there will be some gentle pauses where we will look at the questions that you've been sending us through the Q&A and address some of those questions, probably the clarifications first. But also Megan and Jen are going to be able to type out answers to those questions as they're coming in. Anything that's sort of off topic, we're going to address at the end of Jeff's presentation if we have time to get to it. So thank you for your time, everybody. Jeff, it's your turn now.
Cindy, thank you very much. Cindy, were I to forget to pause at the end of any particular section, grab my attention and then we'll go back if you will, please.
I will.
Welcome, everybody. The first order of business is to introduce my colleagues, part of the executive team at Kids First Sports Center, and that's Megan Smith, 73 inches to my right, and Jennifer O'Hara, 73 inches to my left. I'm not sure whether I made a mistake today in listening to the local radio station as I was showering for this event. But the news was dire. Ohio is actually not been hit near as hard as many other states, New York and others. Yet the news was somewhat dire with talk of laying off thousands of county and city employees or furloughing them because of plummeting tax revenues. Well, that's being repeated all the way across the country. So this is a big deal. I think we all know that by now, how big a deal it's going to be. Hopefully we'll be able to, no definitive answers, but shed some lights on how to think about this and how to navigate the waters as we go forward. I'll be referring to notes a little more often than usual because I don't want to miss anything and I want to keep things in the correct order. First of all, the changing nature of things, the rapidly changing environment, the very staffing decisions and other decisions that we made yesterday have changed. And what have they changed to? We still don't know. So that's how rapidly this thing is changing. I know you all feel the same way. We'll be talking about some of these staffing decisions, especially how they relate to the payroll protection program when we get to that particular section there. We're here today. First of all, the disclaimer, we are not experts. There are no experts in this particular situation here. We're all just guessing and we're all offering opinions. We don't have any better clear understanding of the future or exactly what to do going forward as anybody else does. But we do hold ourselves, we pride ourselves, Kids First Sports Center, we hold good sound thinking and good decision-making models as high values. We've made some good decisions along the way throughout the decades, but more importantly to this conversation here today, throughout the last couple weeks. So we're here to share some of the things that we've done, why we've done them, any things that haven't worked, and with the hopes that, and then also talk about very much what's going on out in the world, and in particular that payroll protection program, the Triple P. So we're not experts. We don't have all the answers, and the answers we thought we had yesterday are different today, and that it's an hourly issue. You know that. One housekeeping point. If our internet were to go down, which has happened periodically, hold tight. the time span is usually 2 to 5 minutes. So that actually would be a signal to go get a cup of coffee. So we don't expect it to happen, and we hope it doesn't. But if it does, that's your task. Go get yourself a beverage of choice. I'm going to share with you here, and I want nice sharing. Share screen. Okay. Now what I'm going to share with you here is a graphic that I did after a webinar that I did last Friday. I updated the graph. I took a moment today to update the graphic. Very simple update, as you will see. But it really, and I thought, am I even going to waste the time to show you this? First of all, when I do graphics, it's nothing to behold. It's not eye candy by any means. But yet, we all got to understand this. So many people are looking to other people as experts, and they have the answers for me, and nobody does. We all have to know the situation that we are in, and I'm going to show you this little funnel. We're getting bombarded with information, and that information generally has fallen into two categories. It's opinions and it's guesses. There's very few definitive answers that have been offered. I think we all sense that by now. This whole thing started for us about March 12th. When I say that, we were tuned into it as early as January and February and watching. But like everybody else, we didn't hope that it was going to come to what it's come to. So the realization for us was March 12th when we had an emergency meeting with our department leaders, and the decisions that we made going forward were upended completely by the end of the day because of continued bombardment of information. We treated some of that information like facts, when in reality they weren't facts. They turned out to be just opinions and just somebody else's guesses. And so we all have to recognize that. And those of us that are not comfortable thinking for yourselves and using all the pieces of the puzzle out there to make your own decisions, you're going to have to get comfortable, because nobody can tell you what to do. Everybody's situation is different, and you're going to get bombarded with all sorts of ideas and guesses and opinions. So you can see where we were on March 12th. I created this on March 27th. Now here we are on April 1st at a bit of a log jam. We're beginning to get some understanding about some of the rescue programs that our government is offering. We have a lot more understanding today at this hour than we did yesterday at the same hour. I certainly am going to share a lot of information on that. But understand the purpose of this particular point, this graphic here. You're going to have to make your own decisions, and you can't rely on somebody else to make a decision for you, because everybody's situation is quite different on that. Okay, moving on. But let me give you just a moment about, okay, stopping screen share. Oh, there we are, up at the top. Down at the bottom to start it, up at the top to end it. Even I can handle that. The agenda. First thing I want to do is talk about the thought models and the mantras that have guided us throughout our decision making and will be guiding us going forward. We don't know what tomorrow's decisions are going to be, but we have to have our rules and our principles in place. I want to give you a few words about the future as we see it and maybe how to navigate it. I want to talk about business interruption insurance and the status as I know it. I'm going to talk about probably the thing that's on most people's mind. The largest item is the payroll protection program. And then, assuming we have time, and we'll do our best to make sure we have time, then some open questions at the end. As Cindy said, clarification questions about the topic. We'll try to get to that right now, or as we go, I should say. Questions off the topic at the end. Make sense? Okay. On March 12th, we had a meeting, and our meeting went something like this. Gee, it looks like maybe we're going to get shut down here. It's a possibility. And what are we going to do? What steps are we going to take? I can't even recall exactly what steps it was because it didn't last very long. It was literally hours later that we were making different guesses. Our first thought was maybe we'll be shut down for 2 to 3 weeks. And we started making assumptions that maybe we should make our planning based on being shut down to the end of May or the end of April. And then the next day it was, wait a minute, wait a minute. We got to think further down the road, the end of May, then the end of June. And now we all have to actually think forward, because I certainly, whereas the best case scenario may be, let's say, the end of April. I don't think it's the likely. The worst case is we have rolling shutdowns for a year or two, and I've heard such. That's not a prediction. Nobody can make those predictions. All right. When this first happened, the first meeting we had, we began to form the mantra, which is cash is king, conserve cash. Now, the decisions we made then to conserve cash are different than the decisions we made along the way, and the decision that we'll make about the PPP, the Triple P program, has changed probably in the last 12 hours as we have learned more about that program, and we have maybe a better, probably more pessimistic guess about how long this thing is going to last. All right. So the first order of business was conserve cash. The cash is king, conserve cash, and then a next step was gather cash. So the first thing that we did is, how do we conserve cash? And we thought about, and we began to make decisions surrounding stopping payroll in one form or another, stopping rents and other essentials that we could, and then kind of in the essential, and then stopping all non-essentials. Now, Megan, in a moment, we'll here in just a moment, we'll kind of do this at the end of this section. Megan, give us some ideas, if you will, about what non-essentials, not meant to be an all-inclusive list, but just to stimulate some ideas in case things have slipped through the cracks back home for you guys. So conserving cash was stopping payroll to one degree or another, stopping rent. In most situations, by the way, we've actually reversed that. I'll explain our thinking when we get to the PPP program, and then stop non-essentials. Now, what's it mean by gathering cash? First phone call I made was to our bank to check on the stability of our line of credit. I talked to my banker and actually good friend now, Billy, and I tuned Billy in to, tried to gently, but I'm a little more pessimistic than the rest of the world right now. I want to check on the status of our line of credit. And his answer was very positive that year. That money's been earmarked for you guys. It's solid. Okay, that's the best I can do at that moment, but at least we did that. And then in terms of gathering cash, okay, well, I mean, there's personal things that maneuvers we may have made to begin to accumulate cash, but that's all very individual. But the big thing that we did is we did what most of the rest of the nation did. We started waiting on what kind of rescue plans are going to be out there. And at that time, we had no idea. I was saying publicly that this is going to get bad. There's going to be big time rescue plans. The Fed's going to jump in, and they're going to jump in a big way. Well, now we all know they've done that, and I will go on record as saying this is wave one. They're going to have to do. I say have to do more. They're going to feel a need to do more and probably go deeper, bigger bailouts, extensions from what's been offered in the last few days. That's what it's a prediction I make because it's parallels the worst case scenario, and there is a mantra that we have lived by many years, and it's really a well-worn proverb, but that is plan for the worst and hope for the best, or pray for the best. Well, when you plan for the worst, you got to say, okay, let's sit down and think very realistically, what is the worst? And that's not a pleasant place to be. And in virtually every other situation that I've ever been in my life, after I've had a traumatic event where you get that bad feeling in your gut and you say, okay, I gotta know what's the worst case scenario, and you sit down and you map through what you think the worst case scenario would be, and then you spend a little time living it and feel sorry for yourself about that, And then you say, okay, now it's time to get into planning for that, and you start taking action. Never in my life has the worst case scenario ever come forth. This time, who knows? We could be closer to the worst case scenario than the previous traumas. Now, none of the traumas being nearly as big as these, and I think everybody understands that. We figured that the 4 criterion that's going to make a difference in the criterion, not the modules, but the criterion is going to make a difference in the decisions we make is number 1, is how long is this going to last? Now, at the time we made that statement, I put that, how much information do we need in order to determine how long this is going to last? I put it near 0. We didn't have any idea. I'd say now it's actually gone up because at the time, initially, we were hoping it was going to be 2 or 3 weeks. Now we know it's not going to be 2 or 3 weeks. We have a little more information. It's not the information we'd like to have heard, but we know a little more, but it's only 20%. That's all we've got, 20% of the information on how long is this going to last. Number 2 is, what are the government rescue plans going to be? Now, again, this is 2 weeks ago. Well, at the time it was 0. We had 0 idea what the government rescue plans are going to be. All right, now we have maybe an 80% of the information we need of what the first wave of government rescue plans are going to be. How much information we have about the second wave? 0. I would put Kids First's chances of getting money from the government rescue plan, the PPP, based on information. It jumped up from 80% yesterday. I'd say 95% today, because we know more information, and I don't see anything that's going to kick us out of it. That's what I was waiting for, information to come in, not waiting for it, but dreading information to come in that would kick us out of it. We haven't seen that. So I'm going to put our chances of getting that at 95%. Now, then the third item is what's the economy? What condition is the economy going to be in when we get back? Well, okay, we start back at the end of May. Are we going to have 50% of our enrollment? Are we going to have 60, 70, or is it going to be 30? And so at the time, the answer to that was 0. All right, we had 0 idea. It might not be too bad, but it might be like god awful. And so now I'd say we have 20% because we know it's going to be bad. It's not going to be the best case scenario that we might have hoped for before. And then the fourth criterion, okay, in how we make our decisions is what kind of cash do we have on hand? And at the time we had 80% of that information. It kind of, as I began to look at my personal finances and pull together cash and looking at what I could do to prop the business up, how much cash the business had, that was easier to figure out, how much cash I had. And then, you know, a few days ago, I jumped to pretty much 100%. We knew what cash we had on hand. Well, now it's back down to 80% because now the payroll protection program has jumped in. Now we think we're going to have more cash. We have a 95% chance of that. We don't know that. And not only that, we don't know whether the best use of that payroll protection program is to seek to use it on items that are items of forgiveness, or to stash that cash for a worser case scenario where we need that cash for existence. So what we thought we knew yesterday, things have changed there. I probably going down some paths that are probably not giving people comfort. We will get to a point of discussing the payroll protection program and why we may be shifting some of our decisions in how we use that money that we think we have with 95% assurance. All right, now we're going back just a moment and talking about what are some of the non-essential things that you might want to consider ditching for now. Then I'll give that over to Meg. Megan?
All right, guys. So obviously this list is not comprehensive, and my audio is going through Jeff, so you're going to continue to see him because we've got Jen and I muted here. But our non-essential list that we have carved out is landscaping services. Don't need those. Trash pickup, supply services, machines, paper towels, soap dispensers, those kinds of things were put on hold. Large capital projects. We had a new parking lot going in. That got put on hold. Pest control services, cleaning services, Marketing. So, I looked through all the mailers and magazines that we were doing, put those on hold, deferred or canceled advertisements, email services, graphic design services, and finally payroll. So we use ADP for our payroll system, and they are allowing payroll onboarding and recruiting for April and May at no charge. So those are all services that we, non-essentials that we cut out during this time of our paused operations.
I'm going to tag on to that in some of the, how might you, some of the more essential expenses. We all have, many of us have taken steps. Today, I spoke with the bank down Tennessee that holds the mortgage to our second home. And we had a good discussion. And for the asking, he said, and this is residential, this is not commercial. I think by now, for those that don't know, and there probably are some that don't, by now it's pretty standard for banks to be offering deferred payment on the mortgage. Don't pay the next 2-3 months and we'll tack that onto the end, or some version of that. Well, here, this is residential mortgage, and he came back, he got back with me, he says, hey, we're going to defer for 3 months, and then the next 3 months would be interest only. Now, so that was for the asking. Ask respectfully and get to the right person, the decision maker, as close to the decision maker as you can. Again, to repeat, commercial mortgages, it has become almost the standard for the banks to be offering deferment for X number of months and maybe some interest only after that. Is that a moving target? Yes, it is. In 3 months, they may be offering another. There may be legislation that requires them to offer another month or 2 or 3. We don't know. It's a dark hole. It's a black tunnel right now. If you wanted a best guess, yes, the decisions the bank has made now they will go deeper going forward. Just like there'll be a second wave of federal programs that are going to be necessary because, again, I didn't say the words, but I alluded to it. Our municipalities are going to need bailing out, and they can't print money. The Fed can print money. The states the states' income plummeting. So the rippling effect of this is great. So expect a second wave of information, but go after what we now know. I know there's not legislation that's requiring banks to do that. I've seen talk of it. I haven't seen it. It could be tomorrow. We don't know. But every colleague that I've had the opportunity to talk to personally, have discussions, has been able to get deferment on their commercial mortgage for some length of time or another. So if you don't have that, you're going to have to ask. And obviously on those kind of things, sooner is better. All right. So before I move on to the next segment, which is we're going to talk kind of maybe a little bit where we are today, what we might see tomorrow, although I've kind of slipped in some of the more dire pictures. But Cindy, let's go questions. Do we have any questions up to this point?
No, really all the questions are really relating to the PPP, but there is one thing I wanted to add. My banker just called me probably about an hour ago, and our mortgage is an SBA supported mortgage.
Oh, good news. Yes.
And this is incredible news. Anybody with an SBA supported mortgage does not have to pay interest or principal payments for 6 months, and you do not have to pay it back.
And I might add, that is not a deferment. That is a grace. That is forgiveness.
That's a grace. So, and it's going to go automatic, but you should really check with your banks because anybody that's getting drafted, for example, this week, as they're trying to implement this, you will get refunded that back into your account, but make sure you reach out to your bankers. Ours isn't due until towards the end of the month. So we'll end up, our first mortgage payment will be in October. So it's a 6 months grace.
So if you have an SBA loan, I hate to use the expression, you're in tall clover, which I often do when things are rosier, but you're in better shape than those of us that have a commercial mortgage without the SBA backing. So that's good news. I do expect I do expect to see, deeper forgiveness for the rest of us, frankly, but I can't guarantee that. Now, the second segment, in a sense, I've already covered a good part of it. Just to kind of drive home, discussion was, a discussion on my local radio station. And by the way, again, Ohio has not been hit hard. This is all in preparation. They're talking about, they have not furloughed or laid off thousands of county workers, but they have, but it is in the works, if you will. That includes EMTs. Jennifer, how many from our waterworks, the Cincinnati Waterworks, our water provider, how many were laid off?
I saw 1,300 or as high as 1,800.
1,300, as high as 1,800. These are essential workers, and if it hasn't hit your community, it's going to. Now, I don't mean to say it can't turn around in a month, because that would be kind of better, but yet just know the depth of the problem. Think the rippling effect of this in the name of planning for the worst. EMTs. Right now in our area, here's the situation. All of this dire is happening, and our doctors and nurses right now are being laid off because it hadn't hit us yet. So we don't have the demand for hospital beds. Now that's going to change likely, as so goes the curve. But yet that's our situation. We haven't even hit that, and we're talking about furloughing because why? Local revenues have plummeted. Where's a best case scenario? It's different than what I spoke about on the 27th, the last time I was on the airwaves. I was thinking, shoot, best case was the end of April. Now, best case, end of May. But it's the idea, I think that's likely? No. I think the end of June, July, August is more likely right now. So we're planning accordingly. So I'm not trying to bring dire news to anybody or darken anybody's mood. It just brings the most realistic thinking that we have available to us today. Cindy, if any, there really wasn't a very long segment there, but any questions that might pertain to that kind of thinking before I move into biz interruption?
No, they're all centered around the PP program and the disaster program. So
okay,
we'll hold those till you get to there.
Okay, and the name biz interruption. Many of us in our industry were wise enough years ago. We began to understand. It was 20 years ago. I learned about business interruption insurance, and we jumped on that board 22 years ago. We jumped on that right away. Man, we got to have that. What happens if a tornado lifts our roof off? And so we bought the business interruption insurance, pretty much thinking that that we were covered in the event of our revenue dropping off the cliff. Approaching zero, as if you will. All right. Well, we all know now that it doesn't cover such, according to, and when I say this, now we're getting into the statement I'm making that it doesn't cover such is gray area. Your policy may have, as some do, a specific virus exclusion. Your policy may not. Now, if your policy has a specific virus exclusion, you don't have certain avenues that those of us who don't have that exclusion may have. So, but it does. But we can't say that you may not. You might actually collect on that, and I'll explain what I'm talking about here in a moment. Okay. So you do or do not have a virus exclusion. Let's forget the fact whether you do or don't have a virus exclusion. My advice immediately, and this came from my son, who we had a conversation very early on, my son, Matt, who's an attorney. We had a conversation very early on in this game, and he said, file a claim right now. So regardless, file a claim. If your insurance agent were to say, oh, it's not covered, say, thank you for that information, I'd like to file a claim. So don't let him or her stop that process. File that claim. The reason you want to do that is there has been a lot of talk, a growing amount of talk at the state levels and some at the federal levels, of having some sort of legislation that mandates the insurers cover. Now, I know the insurance, some companies can't cover it. They don't have enough money so were there be some legislation, we wouldn't get, we'd get pennies on the dollar, but it would be, but right now pennies are important. So make your claim, whether you have an exclusion or not. Don't let your agent get in the way of that action. Now, one of four things is going to happen after you file this claim. You're going to get an acceptance letter, which I don't know anybody yet that has. You're going to get a denial letter, which says we are not going to cover that. It is excluded in your policy. You're going to get an ROR letter, which is a reservation of rights letter, which basically says, in so many words, we realize we may have some exposure here, so we're not going to take the drastic step of denying it right now, and we're going to put this into we're investigating more deeply category. And that reservation of rights letter is going to request that you supply some supportive information behind your claim, and why your building, if you choose to go this way, why your building may have been damaged. You still get your roof, but yet you have had an invasion of microbes. Okay, so is that a legal claim that would hold water? We don't know, but it's a possibility. We're looking into it now. There is case law that microbes can damage buildings. All right, mold or mold spores could be called microbes or microscopic particles, I should say. So that can damage buildings. And there's, by the way, there are many of the policies that do have mold exclusions. By the fact that there is a mold exclusion, does that mean that, is that an implication that it does cover viruses? Well, we're going to make that argument to our insurance company. But going back to more general. So if your insurance company accepts your claim, then go celebrate. If they deny your claim, you got two choices. Sue them. You're going to have to get an attorney. Do I recommend that? I don't think I would. I can't recommend what you should do. I don't think I would. If I had a virus exclusion, I think you'd be pouring money into legal fees where you have a small chance of return. But maybe that small chance is worth it to you. Or wait, which basically means do nothing and hope that there might be some sort of legislation that is going to force the insurance company's hands. All right, if you got, I'll go to number 4. If you got no response, then really I suggest you consider getting an attorney there, because that's not an acceptable response. The insurance companies either got to accept, deny, or issue that reservation of rights letter. Let's go to the gray area, the reservation of rights letter. I'll read what came to me hours ago from my son. This is from Matt. Dad, XYZ insurance company, our insurance company, has 21 days to accept or deny a claim, but can extend it if they need more time to investigate. They will very likely, because we've already had a reservation of rights letter, they will very likely claim that extension. They can pretty much delay ad infinitum on this. So the question will be, at some point, perhaps now, how long do we wait before filing a declaratory judgment action, which means that we'd seek the court to quickly rule, at the very least, the civil authority clause should provide coverage for 30 days. Now, if you're going to ask me the legal implications of that, I'm not equipped really to answer that. I haven't delved in to try to educate myself on that because it's not in my hands right now. It's nothing I can do anything about. So it's something I really would like to know more about. I don't. That's what the other lawsuits are doing. Blah, blah, blah. The 12-month business income clause will be harder to prove. Claiming physical damage to the building because of microbes will be harder to prove. So we have to think that through very carefully. And he then offers an opinion of our next action, which is kind of irrelevant, basically to contact our adjuster and have a conversation with him. So that's where we are right now. He just sent me, or this morning, I did bother to post it on my community Facebook page, Boot Camp Community Facebook page, an article about 6 restaurant groups that have somehow or another formed and are filing lawsuits to the insurance companies. So there's a lot of things happening on the legislative front. There's absolutely nothing definitive. And what might happen in your state would be different than what happens in my state. So the only thing I can say just beyond that business interruption, besides making that claim, is keep your ear to the ground on that. And then if you fall into that category, you might want to consider, is it time to consider getting an attorney? Think that through very carefully, because that's money you're going to be spending that you won't have to exist on down the road. It might pay off. It might not pay off. Cindy, any questions before I'm pretty much exhausted what I know at the moment on business interruption. Any questions?
No. Nope.
Okay.
They're anxiously awaiting that PPP information.
The PPP information. Okay. I've got a document I will show you. Okay, here we go. Share screen. All right, we're going to look at the PPP information relative to what you need to know as a borrower. This document I'm showing you is a verbatim copy of multiple documents that I have received within the last 12 hours from many business owners across the country. The document, all the ones that I have, all seem to be identical, which means it did not come from the XYZ bank, that it came from the SBA. I don't know that. It doesn't say that on there. I'd love to see that. But yet many of you have probably seen the document or seen the information I'm about to show you. Now, what I'm going to show you is in a little different format, because I copy and pasted the verbiage into a word processing program and put some notes to it. Now, that's just to help us, but I've not changed any of the wording, and obviously, therefore, none of the substance there. So this is a letter. I've received it. Handful of others. Bob Tannen was the first one that got it to me. Bob, if you're listening, how you doing? TJ got me another copy. I've gotten handfuls from other folks. So it all seems to be consistent. I think we can assume this is not from your bank, that this is from the SBA. Do know that there's going to be gray area here, and your bank will interpret the gray area, and that's the rules of the road for you. What your bank decides on may be different than what somebody else's bank decides on. So what is right? What is right is what your bank, then how your bank interprets this. Okay, so let's go through. We'll blow this up for you. How's that? Is that looking pretty good from everybody? Looking good? Good. Okay. We all know that there's $350 billion, and that's important, because that money, if you do the calculations for the X number of businesses in the small business in the United States, it comes out to about $15,000 per business. And I can tell you that our calculations for Kids First are coming up to somewhere around $625,000, which means somebody out there isn't going to get any money if I'm first. Now, I say that a little tongue-in-cheek, and I hope everybody understands that, but that's the nature of this program. It is limited. Now, does that mean that there won't be more money when this runs out? No, there very well could be, but you don't know that. I don't know that. All loan terms will be the same for everyone. All right. This loan will be forgiven. Let's go to the hot button, if you will. What's going to be forgiven? This loan will be forgiven as long as the proceeds cover payroll costs, mortgage interest, rent, utility costs over the 8-week period after the loan is made. And if you're a little confused about some of these dates in these periods, join the club. And then, that's not or, and, hold on, you have information, Jen?
I don't have information. I wonder if everybody's screen is looking like mine. Where it, it kind of cut it in half, so.
I can't see it. You're going to have to turn around a little bit. Oh, okay. I expanded my screen so I could see it bigger,
When you did that,
but you all couldn't see it bigger. I just learned something. So we're going to do it this way. I want to get a little size here to you. Okay. All right.
Thank you.
I think we can even do better than that. Nah, I'm not going to try. We'll go out. Does that look good,
Yes.
Jen and Meg? Okay. Okay. How about you, Bob, TJ, everybody?
Works good.
Okay. All right, 49 billion loans. Okay, so we've got it's covered payroll costs, mortgage interest, not principal. So if your business has a mortgage, not you personally, if your business has a mortgage and it's paying interest, that's covered. Rent, utility costs over an 8-week period after a loan is made. There's confusion about that. Number one, okay, employee compensation levels are maintained. We all know that you're going to kick out in the what would be forgiven is any dollars over $100,000 are going to get kicked out of that calculation. Or I do not understand the last sentence. Due to likely high subscription is anticipated that not more than 25% of the forgiven amount may be for non-payroll costs, such as, in the above paragraph, such as a mortgage interest, rent, utility costs. I don't get it. I don't know whether anybody does. Nobody I've talked to quite understands it. We'll assume we're just going to leave that go for the moment. All right. Good news. The loan payments are deferred for 6 months. Might that be extended? Who knows? We don't know that. When can you apply? I think many of us have been following this, understand that the bell goes off, tomorrow, Friday, April 3rd. For small businesses, sole proprietorships, and then April 10th for subcontractors and self-employed. All right, where do you apply? You apply through your bank, not online. Now, the SBA disaster loan is an online application. You're going to apply for this directly through your bank. Any SBA lender, your bank, hopefully your bank is an SBA lender. If they're not, they may be scrambling to sign up to become one right now. I know that I have one business that banks, it's unrelated to gymnastics, it banks with a matter of fact, we're their only commercial customer. They had no idea about this, but they're scrambling to get on board with this. So, okay, to talk to your bank. If your bank has no idea what you're talking about, and they're not anxious to learn very quickly, go to another bank. There is an incentive for that other bank to help you out, and you'll explain that when we get to the compensation that the banks receive. So there is an incentive for another bank to take you on. Will they be taking care of their own first? Possibly. I would say that depends on how many applications they have and how many they can process. Okay, who can apply? We're not going to go deeply into this. Almost all gymnastics schools fall into this category of 500 or fewer employees. What do I need to apply? Complete the loan application, which is available. Cindy Shelby, there's a few documents that I can make available that they're on my Facebook page now, but I can make available to you guys if you can then disseminate it to these listeners. Is that easy? Can you do that?
Yes.
Okay.
Yes, we can.
Okay, good. Good. Okay, so that application I will include. Okay, deadline June 30th. Forget you heard that. Move now. What other documents will I need? Okay, you're going to provide the payroll documentation. On the application, you're going to be asked, what is your average monthly payroll over this particular year period, which is still unclear which year period it is, by the way. But so you're going to need to show the lender that documentation. Now, how thoroughly will they vet that? I bank with thank goodness, I have a wonderful banking team at First Financial Bank here in Cincinnati. And I feel very blessed that I do. How carefully are they going to pour through our calculations from the spreadsheet that we created internally, which follows the rules of the road, I might add. But so I don't know that. And as a matter of fact, each bank may actually handle that a little bit differently. So your lender is going to then to somehow or another they're going to deeply vet or more passively vet the numbers that you provide on the application. Do I need to first look for other funding? No. For instance, and so that's different. Most SBA requires get funding somewhere else. If you get a loan from somewhere else, you do that because you're not eligible for our money. How long will this program last? Well, there's 349 billion worth. Okay, that's the answer right now. How many loans can I take out on this program? One. You can't double dip between this and the SBA disaster loan, which is different. All right, what can I use it for? You can use it. Now, remember earlier we talked about what's forgiven. Now here's what you can use it for, which is a different question. Payroll costs and benefits, interest on interest, not principal, interest on mortgage obligations incurred before February 15th, rent under a lease agreement in force before that date, utilities before that date. What counts as payroll costs? Okay, this can get a little confusing, and we're still confused here at Kids First. Salaries, wages, commissions, tips. All right, benefits include vacation, leave, severance of some sort or another, group healthcare benefits, and then payment of retirement benefits. All right, two things that we're unsure about. What about, and we actually, we think we are going to present it as a separate line item to our bank, and we are going to include dental and vision. And also we have a short-term disability policy, for our employees that is all part of our group plan. We're going to take the spirit of this and say this is a benefit. We're going to put a separate line item column so it's very transparent. And then we're going, if the bank says, you know what, that's not included, we'll take a few seconds to delete that column from the spreadsheet. So that's how we're going to handle that there. And state, what else is included? Taxes, your payroll taxes, all taxes, as I understand it, associated. It doesn't say anything about Social Security in this information. And maybe it's implied in there, but it just crossed my mind. I don't know the answer to that. It simply says, doesn't say federal, state, and local taxes assessed on compensation. So right now, the way I'm reading this, Social Security is excluded from this. That's an opinion, not a fact.
What about bonuses?
Bonuses, and there are bonuses included here in this list? I don't see it. I have read elsewhere that bonuses, because bonuses that you have given, that's compensation. So my gut would be, would I include that? Yes, I would, but I would be very transparent so that there's no sort of feeling of nefarious accounting when you're applying for this loan. So that's how I would handle that. Is I would include that bonuses. You're thinking of our BOA. Absolutely.
Yes.
But there hasn't, yeah, absolutely. I don't know. Pardon us, we're going to have a little board meeting. Y'all can go get a cup of coffee now.
Someone asked a question.
Someone asked the question. Yes. I don't know the answer to that. All right, how large can the loan be? There's a $100 million cap, and we talked about the cap of $100,000 per individual employee. How much will be forgiven? All right, this money is a loan unless you spend it on certain things that fall into the forgiven category. And as you see, it's got to be over the 8 weeks after getting the loan. All right, again, there's confusion in many people's minds, certainly mine. There is then that statement says likely to the high subscription. It's anticipated that no more than the 25% of the forgiven amount can be used for those non-payroll related costs, such as mortgage interest, rent, and utilities. That is very muddy to me. The banks the bank, it's money to the banks. Our bank, I talked to Billy about it. Our bank is struggling with trying to figure that out too. Another reminder, pardon me for repeating, but it bears repeating. The decision that First Financial Bank makes for its clients may be different on that issue or any other issue. The banks are interpreting this on the fly. Okay, all right. Then the other criterion for forgiven money, you've got to maintain your staff and your payroll based on the number of staff, the number of full-time. It doesn't say full-time equivalents. I have seen those words elsewhere. I would assume that's full-time equivalents. So if you don't bring back the same number of full-time equivalents as you had previous to the crises, then it's going to be, the forgiveness amount is going to be reduced. And I have heard elsewhere that there's a 10% slop factor on that. So it has to be within 10%. Don't take that statement to the bank, so to speak, but yet there might be some slop on that. Okay, you must maintain the same wage for your employees, or at least 75% of it. You can't pay 60% of it and then have that forgiven. You got to pay 75 to 100% of it. There is a rehiring issue. Yes, we have laid off. We have done a mass layoff. Kids First has very sadly, and unfortunately, had to lay off how many people?
Nearly 190.
190 employees. And so some of those we may be hiring back, and then you have until June 30th to reset. But yet, how do you calculate that in the forgiven period? It's unclear to me right now. And I think it's probably, if it may be in this data or this information may actually answer that, but it's going to be a complicated winding gymnastics information. It's going to be gymnastics to figure it out from there. So I certainly am not sure of that. Okay, requesting forgiveness, okay, after the fact, all right. Okay, that period is passed and you want to have X amount of dollars forgiven, you're going to submit that to your lender. Is there a form? Is there we don't know that yet. And there is a deadline of 60 days. I assume that's after that period of time, not from today, but after that period of time. That's unclear. What is my interest rate? Every document, when I first got this document from Bob, it said, what is my interest rate? And I saw it's a 0.5 point fixed. And I immediately assumed that this information came from Bob's particular bank. I began to get other information from other colleagues with exactly the same wording. So there may be some information out there that says something different than 0.5. We all know that we have read in days preceding that it was up to 4%. I can't answer why that's a 0.5 point, but according to my calculator, it's maybe that's some good news for us. Maybe that's going to be everybody's fixed rate. And that up to 4% is old news. We can hope that. When do I start paying interest? Deferred for 6 months. However, the interest that you're not paying during that 6 months is going to accrue and be added to the loan. That's the way I read that. All right, when's the loan due? We all heard up to 10 years. Now here we're seeing repeatedly in all the documents I've seen in 2 years. Are there exceptions? We don't know that. There is no prepayment, and I'll foreshadow a point I will make more strongly in a moment. And that is get this money. Get this money now. Don't focus on the details and the vagaries of, is this forgiven? That's second. First thing is take the time to get the money and then figure that out as this becomes clearer, and superimpose that more clear, increasingly clear information over your particular situation. I'll explain I'll give you some examples here in a minute. We're going after that. Forgiveness may not be the best use of this money for everybody. Everybody I've talked to is hung up on that piece of this legislation. I suggest that that be a lower priority until you know it's the smart thing for you to do. Okay. So what do I need to certify? We good? We're doing good, Jen?
Doing great.
Have we doing okay on time?
Did-
Was that 5 minutes or is that okay?
Yep, 5 minutes.
And there are some questions.
Is that all the time we have left?
You can go a little bit longer, Jeff. It's okay.
Okay. All right. All right. Well, I need to certify, blah, blah. I'm going to let you read this when you get the document. I didn't know we had a time limit. Huge apologies. Let's go to, all right. I want to go to and spend a moment on that same program from the lender's perspective. Now, this is important because it helps us make decisions. Okay, who's eligible to lend? We all know that. If you're an SBA certified lender, okay, you're good to go. There are additional lenders that they're going to be popping up. Are they guaranteed? Yes. The bank has every incentive to give a loan to you because they are backstopped 100% by the SBA, assuming that they don't step out of the parameters when they're vetting you for the money. So your bank is going to take care of themselves on that. So they're going to vet carefully because they want to be 100%. That bodes well for you going. Here's what it means. It bodes well for you going to another bank. If your bank is not participating, then another bank has a financial interest to help you out. Do they have the manpower? Those are questions that we don't know yet. All right. Now, what are they looking for? This is written to the bankers, so you need to know this. All right. You need to prove, the banker needs to make sure that you are in business February 15th, 2020. That's pretty easy to do. The borrower had employees for whom they paid salaries and payroll taxes. Remember, you've got to be able to show documentation of these payroll costs. And then number 3 is you got to show that the dollar amount of your average payroll cost. So there again, that's more documentation. But that's the directive to the bank, which helps you when you're preparing your loan packet for the bank, which you're probably going to be doing, if anything like me, as soon as this is over. That's exactly how I'm going to be spending my evening and early morning hours as long as it's needed. Okay, the banks are compensated thusly. Loans under $350,000, they get 5% of the loan proceeds. Greater than $350,000 to $2 million, 3%, and loans greater than $2 million. We're going to be in the 600. We're going to be in this category here. We're going to be about $600,000. So the bank will generate from us from the Kids First business. There's other businesses we're applying for, about $18,000. So that's well worth their effort to spend time with me. Now, I already bank with them, so I have the relationship. But let's say I was walking down the street, say, hey, I need some help. My bank isn't helping me out. They have an interest in it. So you know that helps you when you're talking to bankers and making your decisions. Okay. Jen was going to offer, so are we limited on time? I mean, okay.
Do you want to take some of the questions in place of this?
Okay, I'm going to make some comments and then we'll take questions because it'll probably then involve you. Kids First has made, when this happened early on, I said, by the way, I own the building in a family partnership that Kids First operates out of. So I am the landlord. Kids First is the tenant. Early on, I said to our Laura, our accountant, I said, withhold rent, defer. We're going to defer rent. I've gotten deferment on the mortgage payment. Defer rent. When I understood a little more about the payroll protection program, that it did include some of the forgiven money does include rent. I said, you know what, Laura, pay the rent. Forget that, pay the rent, because if that money can be forgiven, and we don't know that yet, if that money can be forgiven because we used it for rent, then that is, if you will, free government money. Now, and the cash, so that's good for Kids First. And the cash doesn't disappear just because it comes into my account. If I need to loan that money back to the company later on, then the company can have that cash back. So this is not, and if you will, an effort to drain the company's resources. It is an effort for the company to fulfill its resources, fulfill its obligations, and then possibly that money will actually become part of the forgiven piece of the PPP. The other point I'll make, and I'm going to turn it over to Jen here because she has some points to make, is that we're not sure that the best use of the PPP is to chase the forgiven money. What if you chase that and you hire back staff that actually, and we're closed for 6 months. We have to be closed for 6 months. That money is gone. If your staff were to stay on unemployment, they can still actually derive income from that unemployment, and the cash that you were the cash that you gave away through the in an effort to use that PPP money as a forgiven source is gone. So there is a good argument for some organizations to not use any of the PPP money in the forgiven category, but to use it as a loan, and a loan as it is, because if you don't need that money later on, you can undo it. You can prepay it. So I'll make that argument. Look carefully at your situation there. We're not chasing getting that money forgiven is not high priority for us. Staying in business over the long haul is high priority for us. Jen, you have some points on what we've done.
Yes, I can do that.
Okay.
I don't want to run you out of time.
No,
Okay.
I've exhausted my knowledge on the subject.
Okay, so to go backward in time for a minute, just to recap real quickly. Can y'all hear me?
Louder, just loud as you can.
Back March 12th is when it all kind of hit the fan for us, as Jeff mentioned. And when we came upon, let's say it was March 15th, we started running projections with no tuition for April. And we realized at that time, we were looking at maybe having a modified team schedule, which meant our revenue was going to be decreased or completely omitted. So we ran April projections on all of our expenditures with no revenue. It was clear to us at that time that we needed to start looking at payroll. The goal for us from the very beginning of this was to conserve cash, and payroll is quite honestly our biggest expenditure. So we started March 17th, and I can't believe it's just been that short of a period of time. That's when we issued our first mass temporary layoff of about 190 employees. We kept on our department leaders. So we had our executive team and our department leaders, which is between the two gyms, approximately
about
20 employees. And we all immediately took a salary reduction. So those reductions were anywhere, at 60 to 80% of our salary, depending on where we were in that pay period. We continued to watch our cash flow. We reassessed in, I believe it was March 26th, and we were looking at that point in doing another round of layoffs. So that first round of layoffs included all of our hourly part-time people and our full-time hourly employees and one full-time salaried employee. By March 26th, we were looking at doing a second round of layoffs that included our leadership staff, simply because we know the importance of conserving those dollars, and to move forward with people on payroll that can't teach classes. We had to really figure out if that made sense for us. Jeff did put forth to our clients a tuition offer, and had he not done that, we probably would have needed to move forward with our layoffs, but our clients spoke. They were very generous, and it allowed us to keep our department leaders on. Because I'm going to go back, he talked about the 4 different criterion that kind of determines the end in sight, how we come out of this. I'll add a 5th one to that, and that is the relationship with our clients that we have when this is all over and we start programming, or we start that resumption of programming. Our clients were very generous, and we did not feel it would be right to turn around and lay off the leadership that they were investing in. Not only were they investing in Kids First, but also the leadership of the department from which they are that is visible to them. So fast forward to the PPP program, and we were super excited about the possibility of bringing back staff and to bring us all back to 100% of our salary. It sounded like that was the direction we would be moving. And then we started realizing that here we are going to bring back staff. We still don't have kids in the gym. We don't have, we're not being productive with our time in a way that is moving our company forward. And we have to stick to that mantra of cash, conserve cash, conserve cash, conserve cash. So in light of that, Jeff and I and Megan have had these conversations that while the forgiveness of that loan would be fantastic, it's more important for us to take those dollars and stash them so that when we come out of this, we are strong and healthy. Without that, we're looking at how robust of a company can we be when we open our doors. And then minutes before we started, we got word from our HR department. We asked her to, Lindsay, to look into a question about the relief that our employees will be getting. Not only the unemployment, which is somewhere around that 50% of their salary. In Ohio, they do qualify for the $600 a week. So we have full-time employees who are going to be eligible to receive $2,400 a month plus 50% of their salary. And they'll also receive the $1,200 stimulus check. So in trying to preserve that relationship with our department leaders, and you know, there's a lot to go in the way of, you know, their dignity and their value to the company, we might be hurting them financially. So we are going to be looking at the PPP and how that applies to Kids First as a whole, but also how that relates to our employees. It may not be, we are not going into that necessarily with seeking the forgiveness of the loan. I was trying to be really fast.
That's good. That's good. Fast is good. You all, you're going to be doing the same thing we are. And here's the words that we use. We're weighing what's in our heart versus in our decisions about staffing. It is weighing what's in our heart, what we want to do versus what is smart to do to maintain the business over the long haul. We are no good for anybody in the community, and that includes the employees, the students, anybody who frequents our organization. We're no good for anybody if we're out of business. So we have to set our heart aside sometimes, and this is one of those cases, to do what makes sense for us to maintain ourselves and survive in the long run. If things get as bad as I'm saying, you get the picture, you understand. Let's take a case where it's not as bad as what I think, and we get back to work earlier and we've got money. Guess who gets bonuses coming back to work? If we've got more cash than we think we're going to have, we're going to bonus those people. We're going to say, we're not going to be bringing all of them back. Why? We're not going to all the students. So those who we do bring back, here's $1,000 for hanging in there. So conserve cash. When I said earlier, our mantra was conserve cash. We could have taken more draconian and deeper steps than we did, but we took pretty deep steps. And right now, this idea about bringing them back in order to get forgiveness may not make sense. I'm beginning to question that it makes sense for us. And this is all hours old. So if you say, tell me more, I said, we can't yet. I'm really beginning to question whether that makes sense for Kids First, and it may not make sense for you. And then again, it may. And now I'm so used to going live on this. I want to say, does that make sense? And then see somebody, you know, nod or raise their hand or break into tears or something. This is my second webinar, so things you got to get used to in the new age.
Are you ready for some questions, Jeff?
Yes, we are.
Okay, key one that's coming out is how long do I have to rehire my employees if the PPP is granted?
I'm not sure whether that is in that document in a clear form. Jen, do you have an idea? I have kept a little bit bigger picture rather than trying to figure out every detail of that. All the detail I've been working on has been getting the money, not that piece of the pie. So
I'm not sure either.
okay, none of us here at this table are sure based on the information we have.
Right, and I would concur with that. I've been told immediately, but then I've also been told, you know, obviously the 8-week repayment starts as soon as you are granted the funds. And so I don't know the answer either on that one.
I'll jump in and say, to tag on, Cindy, I'll jump in and say, again, your bank, you may find out, you may, your
Yep.
you know, your colleague club across town their bank may make one decision and
Yep.
yours may make another one on that.
And that's what's going to be really key with this. Here's a really great question too. There's a gym that's in the county, such as even us, that are mandated that we're closed. How do you bring employees back and pay them when there isn't, you know, there's no gym and students that are going to be in the door?
I'll answer generally. Jen may have, or Meg may have some more specific. It's really, you're paying them mostly, well, I shouldn't say mostly. You're either paying them to do administrative work at home.
Mm-hmm.
Everybody's closed. When I say everybody's closed, you know, most of the country is in the same boat, by the way, those of you don't know it. We are. So you pay them to do administrative work at home, marketing work at home, anything that's going to help you come back, bounce back faster when you do come back. And so you're paying them for that. And then online classes, a lot of folks are trying online classes, if some for pay, some for, you know, for compensation, and some just to stay in touch with their people. We are doing that. We're not going into the online classes business right now, right yet. I hope we never have to, but who knows? And then the other thing is you're paying them to come so that you have them back. That's the other reason you're paying them. Now, that brings me to, is that the best thing to do, to pay them now? Why not get the PPP money and bank it? Now you got to pay it back, but maybe that's the cash that allows you to stay in business. And I don't want to say it's your situation, but we're really keen on that thought right now. Did you have any more to add on that, Jen?
Just those same things. You're doing your building restoration, you're doing your maintenance, you're doing admin, you're pulling them together so that they're feeling like a collaborative group, which is really important. You're planning things for your reopen. Your model of your programming might look very different. So you are doing those things in preparation, but really what you're bringing them back for is so that you can pay them, so that you can forgive the loan, which I think that goes back to you. It's a bit of it's a real question that we have to ask ourselves as a company, what's the best use of those dollars?
Yep. And I think too with that is it depends on whether it's going to be a 2-year repayment or a 10-year repayment, because I've heard both. So,
well, the more recent and I would say more reliable information is 2 years.
yep, I would concur.
But that's not a definitive statement there. There's a couple questions I'm seeing that I can answer quickly.
Yep.
What documentation or payroll does a bank require? Is QuickBooks report acceptable? Maybe. Are there levels of forgiveness? Is it all or nothing? And there is, yes, there are levels. It would be reduced to the extent you follow the letter of the forgiveness covenants, then you'll have 100% forgiven. But yet there are percentages of that. So if you don't bring back, let's say one of the covenants is if you had, and I'm really simplifying this, you had 100 full-time equivalents, then you have to bring back 100 full-time equivalents. And in order, that's one of the covenants in there. And if you only bring back 80% of them, then that implies that I think that you're going to get some, let's say 80% of it forgiven. So it's degrees. Okay, go ahead, Cindy.
Oh, no. That was great. Do you hire back when part of the staff pay 100%? Okay. This one right down here is shelter in place. Is it only bringing back full-time staff to be able to qualify for forgiveness? I think you've already answered that as it's, you're looking at your full-time equivalents, not your full-time.
I answered that with I know that's contrary to what is written. My guess is going to be, I've never seen anything legal such as this. Well, I've never seen anything like this in my life, but I've never seen any legal counting employees that doesn't reduce it to full-time equivalents. So I doubt if the government's going to change horses on that now.
Okay, one more here. There's this, can my employees collect unemployment and PPP plus the $600 per week?
No,
No.
if you're paying them, then you're getting the PPP. They don't collect PPP. They collect their paycheck. You maybe use that money that PPP is forgiven, and you can't get a paycheck and be on unemployment at the same time.
Correct, correct. And then again, the other ones that are right around that stipulation, if I bring back only a certain amount, do I have to bring back 100%? And my understanding too, Jeff, is yours, that it's going to be, the forgiveness is going to be based upon the percentage. If you don't bring back 100% and you only bring back 80, then you're probably looking at just an 80% forgiveness, and then you're going to be responsible for the remaining amount. Is what my understanding is today, this hour. I do not know what that understanding would be 24 hours from now.
And then to tag on to that, I have seen something, I don't know it to be fact, that if you bring back, there's a 10% slop factor in that. So if you had 100 and you bring back 90, that's good enough. Okay.
Yep.
So you're not going to be, if you will, penalized. But there's other covenants. We're just talking about that one particular covenant but it's not all or nothing.
Okay, and then we've got one final one that slipped into here. My understanding is the number, where did it go? Right here. My understanding is the number we are basing our request for is payrolls for 2019. A lot of my costs last year were with part-time employees. Do I include these in my calculation? I've laid off all part-time employees, now only paying full-time employees.
My understanding on that is all payroll costs, full-time,
Yes.
part-time, go into the calculations.
From the previous year.
From the previous year. Now, there is a question. Is it for 2009, the fiscal year in 2019, January to December? Or is it a rolling 12 months? Let's just say, starting last April to went through this March. We're working our numbers right now. We're doing two spreadsheets. Basically, one that's based on fiscal year. It's unclear. To us, it's unclear. Our question to our bank, it was unclear to them too. So we're doing it both ways in the name of expediency.
Correct, correct. And I think that pretty much covers all of our questions at this time, Jeff. I know from my standpoint, there were some points that you verified for me, and then some new information that's going to help us with some decision making. So thank you for your time.
How many folks were we chatting with here?
Close to 90 people.
Anywhere from 70. Yep.
Okay. All right. Very, very, very good. All right. This is, folks, is a bad deal. Do plan for the worst. And by the way, I've said this in writing, but this got the ability to get you down. I don't think I think everybody can answer that one. So how do everybody's secret for not getting down on it is going to be a little bit different. Okay. But here's my trick has always been this. I get a traumatic event that happens and things look bleak because of it. Now, again, nothing like this, but you get the picture. Somebody, a key employee resigns right at a terrible time. And I give myself a period of time, 24 hours or whatever's appropriate under the situation, 24 hours, 48 hours to feel sorry for myself. Right. And then that is up. Then it is pure action. You have to now start saying, okay, you have to go into this mode. What is the worst case scenario? And you go to the worst case scenario. And then you say, what can I do? Here's your planning thought. What can I do to mitigate? Maybe you can't stop it, but what can I do to mitigate that worst case scenario? And you create a plan and you write it down if you have to. And then you start there and you got a plan. Well, I could do this, I could do this, I could do this, I could do this, I could do this. And then what do? You start doing it and you stay busy on your plan. If what happens to the mind, we are victimized to it. If we are not working on something positive and productive, then we begin to ruminate. And then that ruminating can be like water circling a drain. It just sucks you down further. Don't let that happen to you. I do know this, as dire as it seems, a 6 month closure. I wish I could ask this question and see, rhetorically spoken, By a raise of hands, how many of you can have enough cash to handle a 6-month closure? I'd venture to say, Cindy and I had this discussion earlier today, probably maybe 10% of the clubs in the nation. Well, guess what? How many restaurants can handle that? Maybe 10%. And we don't know. We're guessing at numbers, but I think we all get the gist of the whole picture. We don't know, but it's not a big number. This bottom line is the whole world is in this boat. And the federal governments of all the nations in the world are going to be throwing dollars at this problem. And whether they're going to do it in a wise fashion or an who knows about that, but they're going to be throwing dollars at this problem. They'll have to. Now, so right now we're saying, oh, wow, with what we know, we can't make it for 6 months. Well, maybe you can't, maybe that's correct, but things might change in a month or two that would alter that timeline that you have available to yourself. If you gave up and now you find out there are programs that would have kept you going, well, you can't undo it then. So you can't quit on it. You got to keep going, keep adding to your plan and taking action on it. That means stay busy. And get walking, stay busy with, with non-related items as well. Get your exercise, eat well, drink well. If I had a glass of wine, I'd actually toast everybody here. I don't mean that. I mean, drink plenty of water is what I really mean. And then go have a glass of wine at the end of the day, by golly. So take care of yourself in that regard, but you've got to take action or you're going to begin to ruminate. And that, well, it solves no problems. And then you feel like shit. And that's a hell of a double whammy. So you don't gain anything and you feel terrible along the way. I don't think that's the direction any of us want to go. Certainly not.
Hey, Jeff, before we finish up, is there, if anybody had additional questions that they might want to ask of Megan, Jen, or yourself, is there a place where they can go to seek that contact information?
I'm going to say yes to, how can I direct them to my Facebook page, Meg? I don't even know. I've never done, folks. I've just posted Facebook for the first time a few days ago. Not my email address, please.
No.
There's no way that I can't handle the volume I'm getting now. So there's a request.
When we send them the documents that you want to send them to the webinar, we'll send them the link to the Facebook group.
Okay, we're going to send documents that I referred to, documents that you've seen that are pertinent to the conversation. I'll throw in a couple more if I can think of it, and then we'll send a link to the Facebook.
Sounds great.
Community
Sounds
page.
great.
And so that's the best way there.
Well, thank you again for your time. And Megan, Jen, thanks for doing this. Shelby, thanks to USA Gymnastics for sponsoring this and getting this up. We're so appreciative.
If I didn't say it early on, Shelby and Cindy, I know you guys are just pouring time into this industry. So thank you.
Yes, thank you guys. Thanks all the attendees. I'll make sure that I get all of that information out to you. So if you have any additional questions, you can contact the Facebook group. I do want to let you all know that we will have another webinar set for Friday at 1 o'clock with Randy Sikora and Katie Heddens. And they're going to be talking about positive messaging during the trying times. And also this webinar has been recorded, so you will be able to access it at usagym.org. So thank you guys. Thanks,
Bye,
Jeff.
everybody.
Thanks, Megan. Bye,
Thanks,
Cindy.
everybody. Thanks. Good luck.
Thank you.
Thank you. Bye.